Welcome to the Hodges Market Wrap for August 2011. Firstly, the real estate market looks rock solid compared to the economies of the world and the recent happenings of the Australian stock market. Due to this economic uncertainty, the Reserve Bank has yet again decided to leave interest rates on hold for another month. In fact, with the economic data emerging in recent days, there is a groundswell of opinion that believe the next moves by the Reserve Bank of Australia will be to cut interest rates. This move would certainly inject a little more life into the economy and the real estate market. Anecdotally, we are seeing investors moving back to bricks and mortar and away from the uncertainty and volatility of the Australian stock market. With the levelling of prices and in some areas the reduction in prices, combined with the possibility of interest rate cuts, we could see greater activity in the real estate market. While all of this economic uncertainty is still going on, real estate is still selling, and in some circumstances we are seeing multiple bidders at auction. Auction clearance rates continue to hover around the 60% level, with those properties passed in at auction being sold in a relatively short time after auction. Some outstanding results from the Hodges team over the last few weeks include 22 Empire Street, Mornington, sold for $835,000, $35,000 above the vendor's reserve price. With the option to renovate, rebuild or redevelop, 3 bidders bid on the property due to its location, adjoining Memorial Park and only a short stroll to the main street and the beach. A record price was achieved for the property located at 98 to 100 Carr Street, Frankston South. The property sold in 3 weeks and over 70 prospective buyers inspected the property. The beautifully presented property of 4 bedrooms, 2 bathrooms on 2/3 of an acre sold for $955,000. 26 Boxall Street, Brighton, a designer home over 3 levels featuring cinema room, gym and 20-metre lap pool, sold for almost $3 million. The property had all the bells and whistles, smart wiring throughout and an all-important 1,600 bottle cellar. After being on the market for some time with another agent, the property was sold by Hodges within 10 days. It would appear that the shortage of rental properties seen in the Melbourne market over the last 6 years has begun to ease. The vacancy rate in the June quarter increased from 1.7% to 2.2%. For the first time since August 2005, all metropolitan areas have a vacancy rate in excess of 2%. Although the vacancy rates have increased, the Hodges property managers are reporting strong interest in quality properties and receiving multiple applications. It will certainly be interesting to see what happens in the real estate market over the next month. Will interest rates be cut? And will the start of spring show signs of a rejuvenated real estate market with investors emerging from the woes of the stock market? It will be a little clearer next month. Well, thank you for watching the Hodges Market Wrap. Don't forget to take a look at 3AW's Tom Elliott's Economic Market Wrap on the Hodges website for a more insightful report on what's going on in the economy. I look forward to seeing you next month.